Good morning, students. So today we plan to discuss borrowing cost. We are continuing with this series of assets-based accounting standards. So I'll just quickly share the document with you and then we'll start the discussion. Okay, so borrowing cost. So when we talk about borrowing cost, it's important to understand the definition of the borrowing cost. Okay, so now as regards borrowing cost, we can say any cost which is incurred by the entity in relation to the borrowings, right? In a very simple manner. Now, what do you mean by that? Means if let's suppose entity were to borrow something, so any cost which is incurred therein, for example, interest could be the one, right? So now this cost which is incurred by the entity in relation to the borrowings, that's what you call as borrowing cost. Now the question arises that is it really limited to the interest? Answer is no. See, the any cost which is incurred in relation to the borrowing is what you call as borrowing cost. Now there are two aspects to it. One is the cost of borrowing. Second is the understanding of the borrowing. So the first question arises that what is this borrowing? Because till the time we don't have a clarity of the borrowing, how do we get into the cost of that? Yes or no? So now, for the purposes of borrowing, we need to understand the nature of the instrument. Instrument means if let's suppose you have taken a loan, that's an instrument. Similarly, if let's suppose entity has issued preference shares and those are redeemable. Okay, so because these are redeemable preference shares, so eventually entity will have to redeem that, means the entity will have to pay that money back. So that is again a kind of liability only. We should not be considering as if it's a capital. Okay, actually it's a liability. Okay, so now first part is the understanding of the borrowing. So in terms of the borrowings, we don't need to get into too much technicality. Broadly, we can just try to understand that any sort of instrument which will incur or which will involve any sort of repayment, means which is not in the nature of capital. Okay, or which we can say when the entity is required to pay the money back necessarily. That's what you call as a liability. So loan is one example, and definitely we can have this another example of redeemable preference shares, right? Now, there are few more instruments through which the entity may raise money. For example, equity shares. Now, in case of an equity shares, is the entity required to pay the money back? Answer is no. Till the time the company is not liquidated, it's not required to be done. And even at the time of liquidation, there is no clarity as to what is required to be paid back. Okay. So that's why you don't get into that. You'll not consider that as a liability, or you can say as a borrowing for the purposes of this accounting standard. Similarly, when we talk about preference shares also, let's suppose if the preference shares are not redeemable, okay, means those are convertible. So in this case, will the entity be required to pay the money back? Answer is no. So should therefore such an instrument be considered as a liability? Answer is again no. Yeah, so that's why if you look at this table, we can say equity share capital, preference share capital, which is convertible and therefore classified as equity. Will you be considering that as borrowing as per the requirements of this standard? Answer is no. Okay, now talking about borrowings. Now, in relation to the borrowings, so now we are talking about the borrowings. Any cost which is incurred by the entity. One of the costs is very common as we discussed, that is interest. That's what you call as cost of borrowing. Now, similarly, any cost which is incurred in relation to the borrowing is required to be assessed by the entity because it's not limited to interest. Okay, for example, if let's suppose an instrument has been issued wherein there is any premium or discount. Say for example, company has issued some instruments, debentures, which are required to be redeemed at premium. Now this cost which the company will have to pay, what do you call it as? It's a cost on that instrument. Yes or no? Or you can say the cost on that borrowing, because for the purposes of entity, that's a borrowing, right? Now, similarly, if you talk about leases, leases is one topic that we are yet to cover. But even in case of leases, you will find that there is an element of borrowing cost. So you can just park this maybe for the later discussions. Exchange differences. Now you may be thinking that what is the role of exchange difference over here? Exchange difference, once again, you can say can be considered as borrowing cost. Okay, not always. In some of the cases, or you can say there is a specific situation in which even the exchange difference can be considered as interest, and therefore its accounting treatment could be that of the interest. Okay, now what is going to be that situation? Once again, we'll talk about that, right? So this is broadly, you can say, the types, or you can say some of the examples of the borrowing costs that we have. Okay, now we are going to touch upon one aspect which is in relation to the accounting treatment of the borrowings and the borrowing cost. Okay, so now let me just take you to the working file. See, whenever we talk about borrowing cost, and now what I'll do is, for the purposes of our discussion, I'll be using the term interest in most of the cases. So interest, we mean to say the borrowing cost. Okay, so interchangeably we may be using this term borrowing cost or interest. Yeah, so when we say interest, so that should mean effectively the borrowing cost only. So don't get confused with that, right? Now, when it comes to the accounting treatment of the borrowing cost, okay, now what do? Every time we have a borrowing cost, we need to charge it to P&L. So that means, where will this go? You should remember always, it goes to P&L, right? Means every time you see the borrowing cost, it should go to P&L. However, there's one exception to this. Okay, so we can say there's an exception to this. Means in one of that situations, or in that exception, this borrowing cost may not go to P&L. So let's try to understand that. So there's a concept that we call as qualifying asset. Now let's try to understand about qualifying asset. So we can say any asset which takes substantial period of time to get completed. Can you give me some examples for this? Any example that comes to your mind for a qualifying asset? Means an asset which takes substantial period of time. Substantial period of time, you can say, is generally a period of 12 months or more. Great. Lloyd says it's a building. Emin says building. Very good. Any other example that comes to your mind which will take substantial period of time? Sridhar says machinery making. Then Bala Murugan saying specialized machinery. Emin says vehicle. No, so when you talk about vehicle, do you think that it will take 12 months for a vehicle to get manufactured? Not always. Yes or no? What about others? Quickly. What are the examples of any asset which will take substantial period of time? So when you say Methli says computer, so do you think this computer will take 1 year to get constructed, to get built up? So just think about it. Okay. No. So what are those examples? Very common example for that could be building, road, dams, bridges, and of course, there are various other examples, right? Now, what are these? Now, these are the assets which can be considered as qualifying asset. Now, the definition of qualifying asset is very simple. Okay, do we have any other technicality therein? No. So, what do we need to check? An asset taking substantial period of time to get completed. Okay, now comes the question that how is this relevant for us? Because we are discussing borrowing cost. Okay, so in the context of borrowing cost, how is this relevant? Yes or no? So now, when it comes to the borrowing cost, what did we discuss? We discussed that any borrowing cost will always go to P&L, right? There's one, as you can say, there's one situation in which case this borrowing cost doesn't go to P&L. So that's why what will happen? We can say if we were to look at the borrowing costs, okay, we can say there are two ways in which we can look at it. If this borrowing cost is in relation to a qualifying asset, the other situation is the borrowing cost is incurred by the entity and that is not in relation to qualifying asset. So not a qualifying asset. For example, loan is taken by the entity for construction of building. So what do we have? We have a qualifying asset for this borrowing cost. Yes or no? If let's suppose the company has taken a loan and it's a general purpose and there is no qualifying asset which is being constructed using that borrowing. In this case, when this is not in relation to a qualifying asset, where do you go? Where will this cost go? It will always go to P&L. See, borrowing cost has to go to P&L always. That's a thumb rule, you can say. However, if it's incurred in relation to a qualifying asset, in such a situation, what do you do? In such a situation, you will capitalize that with the qualifying asset. Means, instead of taking it to P&L, where do you take it? Instead of taking it to P&L, where do you take it? You will add it to the cost of the qualifying asset. Understood? Yeah. You will add it to the cost of the qualifying asset. Lloyd says something that we discussed under PPE. Answer is yes. Yeah. It's very much on the similar principles. So if you go back to PPE, You remember there are some cost components which are required to be looked at. And in relation to the PPE, if you remember, you would have seen that there are some costs which are added to the cost of the PPE. Okay. Now, this borrowing cost can be one of that cost component. Understood? Yeah. But now what we are trying to do is we are just trying to get into the details of this particular cost component, not about all the cost components which will go to PP. Okay, it's the specific component you can say, which is a matter of our discussion. Clear? Everyone clear on this? Accounting treatment of borrowing cost means it goes to P&L, and when do you capitalize it? Everyone clear? Yeah. Simple to understand. Yeah. Okay. Now, when it comes to the borrowing cost, I think Aditi has a query. Yes, Aditi, please go ahead.
Sir, in the study mat, there is inventory also mentioned that it is in qualifying asset. So could you please explain why it comes in qualifying asset?
See, as we discussed, any qualifying asset, if you have, okay, and if let's suppose borrowings are taken by the entity in relation to that qualifying asset, so you will capitalize it. Now, please remember, for a qualifying asset, what is the first step? It has to be an asset. Only then you will check whether it's a qualifying asset or not. Yes or no? So that's your first step to begin with. Now, some of the examples that we have taken when we say building, when we say any sort of plant which is being set up, which is taking, say, 2 years, 3 years to get completed. So you call it as a qualifying asset. Now, generally, if you look at it from the perspective of inventory, so you'll say generally, inventory will not meet the criteria of a qualifying asset. I'm saying generally. Why? Because if you look at the nature of the inventory in most of the cases, it will not meet the criteria of a qualifying asset. Why? Because what is the criteria of a qualifying asset? It has to take substantial period of time to get completed. And what is substantial period for us? It has to be generally 12 months or more. So in most of the cases, what do you find? Companies do not have inventory which are taking substantial period of time, for example, 12 months or more. Because generally, what do you find for inventory? There's a period of, say, few hours, or at time few days, or maybe a few months in some of the cases for the inventory to get completed. However,
Yes.
there are some examples of inventory items as well in some of the industries which meet the criteria of a qualifying asset. Now, what are those? A very common example, very simple example for that could be real estate. Now, in case of real estate, what is the inventory? Can you tell me, Aditi? What is the inventory of the companies in case of real estate business?
The buildings and all.
Buildings, okay, or the townships or the projects which the companies work on.
Yeah.
How much time do they take to get constructed? 3 to 4 years, 5 to 7
Yes.
years generally. So
Yes, sir.
will that meet the criteria of a qualifying asset? What do you think?
Yes, sir. It will meet.
Yes. So that means there are some inventory items which will meet that criteria. Similarly, if you go to liquor industry, now there are some of the liquor items which take time more than 12 months to get completed, to get finished. Okay. So that's why you can say in some of the cases, inventory can meet the criteria of a qualifying asset. And therefore, if there are any borrowing costs incurred by the entity in relation to those items, you capitalize that. Clear?
Okay, sir. Got it. Understood, sir.
Sure. Yes. Yes, Josh. Please go ahead.
Very good morning, sir. Sir, we can also take the example of the petroleum. Like for opening the petroleum, we have to first build the petrol pump, which can also be a qualifying as it.
So can you please explain what is the product or what is the inventory item? Means what is it that is taking time to get completed? I think you'll have
सर
to
जैसे कि
elaborate that. So what
ओके
do you mean
सर
by
जैसे कि
petroleum?
मुझे सर जैसे कि मुझे मेरा खुद का पेट्रोल पंप खोलना है तो उसके लिए
Mm-hmm.
पहले मुझे साल भर का पहले अपनी बिल्डिंग पे कंस्ट्रक्ट करवाना पड़ेगा जो
Right,
इंडियन ऑयल से है ना किसी भी मुझे पेट्रोलियम कंपनी से पहले मुझे उनका लाइसेंस बनवाना पड़ेगा जिसमें टाइम
right,
लगता है फिर वो
right,
परमिशन देंगे फिर मुझे अपना लैंड
right,
उस हिसाब से कंस्ट्रक्ट करवाना पड़ेगा मुझे उनके ही टैंक्स लगाने पड़ेंगे वो भी इसमें आप
right.
इंक्लूड कर सकते
See, definitely any of the assets can fall within the purview of qualifying asset. Important thing is for you to check the nature of that asset and whether it is taking substantial bit of time to get completed or not. Like for example, you are saying the building. Let's suppose if you construct this building or the petrol pump and you believe that is going to take more than 12 months, then of course that's in a way your machinery, your plant setup. Okay. So will that meet the criteria of
हैं
qualifying asset? Answer is yes.
Yes.
Okay.
ओके सर
Then I think I have this query from Kambira Kajanaro. Uh, she is asking that slow moving stock that's it. No. So please understand. We are not talking about any asset. We are talking about asset which is taking substantial bit of time to get completed. So when you say stock which is there in the warehouse, so that is already completed. If you are not able to sell it, let's suppose you are saying I'm not selling the stock for next 12 months. So that doesn't become a qualifying asset. Okay. Then Ishan is saying, sir, Rolls Royce say making personalized vehicles that tech. Yes, of course. Yes, of course. See, there's no specific situation that I can just look at, or I do not have any exhaustive list for this. Depending on the nature of the item, depending on the period of time for its completion, there are various other examples you can just include there. Important thing is what? It has to meet the criteria of a qualifying asset that we just discussed. Okay. So if that meets the criteria, definitely it becomes a qualifying asset. Okay. Clear, Ishan? Yeah, Ishan, clear on this? Okay, great. Then I think Methili has a question. Yes, Methili, please go ahead. Yes, Methili, please go ahead. Please pick up.
Hello, sir.
Yes.
Yes, sir. I have one doubt regarding not qualifying assets.
Okay.
Uh, the repetitive basis over a short period of time is given in study mat. Can you explain that, sir? What is non-qualifying assets under a short period of time?
Okay, before I do that, can you help me understand what is a qualifying asset? Are you clear on that?
Yes, sir.
Okay, very
Substantial
good.
period of 12 months will be getting ready. That is the qualifying asset.
Okay, very good. Now, as regards not a qualifying asset, there is no definition. The simple way to look at it is anything which is a qualifying asset, you will check. And what is not a qualifying asset, which doesn't meet the criteria of a qualifying asset. Okay. So you don't need to get into the
Yes, yes.
criteria of what is not a qualifying asset. What do you check? Whether the asset is qualifying or not. If you say it's a qualifying asset, very good, capitalize. Otherwise, it's not a qualifying asset. Understood? That's how you need to look
Okay,
into
sir.
it, right? Now, there can be
Okay,
hundreds
sir.
of examples of what is not a qualifying asset. We don't need to get into that. Very simply, you only need to check what is a qualifying asset. See, what is our objective? Accounting treatment. As I told you, borrowing cost has to go to P&L always. Okay. But
Yes, sir.
there's one exception to this rule. You can just say it's an exception to that. And there's only one exception to that. What is that? Whether you have a qualifying asset wherein this borrowing cost is being incurred. If yes, then you capitalize. Okay. So for us, what do we
Yes.
need to check? Only and only whether the asset is qualifying or otherwise everything is not qualifying and everything has to go to P&L. Right? Clear?
Yes, sir. If the same asset is in this question, suppose, for example, an inventory is producing or manufacturing for the period of 12 months, and the same inventory which is producing the manufacturing the period is less than 12 months, and which is a larger quantity. So, in that case, this is this qualifying asset, or in second case, that larger quantity of inventory which is completed the process within 12 months. So this is a qualifying asset or a not qualifying asset, sir?
Yes, again, depending on the period, you'll have to assess that. Right? You'll have to assess that on the basis of the period. Okay?
Okay, but we not consider that quantity, sir. What
See,
quantity is there, large quantity or smaller quantity? Is not relevant, sir.
no, so that is not relevant. Why? Because we are looking at one item. If let's
Okay.
suppose you are producing 100 items, every single item is taking 1 hour. But let's suppose you are producing 1000 items. So you are saying no, 1000 items will take 1000 hours. So that doesn't make that collective group of 1000 items as a qualifying asset. You need to look at it on an item by item basis.
Okay.
Understood?
Yes, sir.
Right. Very good.
Thank you, sir.
Sure. Then I think Virashri has a query. Virashri is asking, could you explain how intangible asset is considered as a qualifying asset? See, please understand that a qualifying asset is not something which is going to apply to only PP. As we discussed, in case of inventory, you may have a qualifying asset. Important part is what? You need to find out whether the asset is taking substantial period of time to get completed. If let's suppose you have an intangible asset which is under development, many a times what do you find? There are intangible assets which are under development and which take 1 year, 2 year, 3 years to get completed. Now, will that meet the criteria of a qualifying asset? Answer is yes. I think intangible assets as a concept you have not yet covered, as per my understanding. Okay. Once you cover that, you will get more clarity on this. So maybe you can make a note of this, that what are going to be the intangible assets? What is the criteria for that? So once you cover AS26, you will get more clarity on this. But as of now, please understand, for us, there can be any asset which may take substantial bit of time to get completed. The moment you have that situation, you will call it as a qualifying asset. Even for intangible assets, you may have that because many a times companies are developing their intangible assets. So it's not necessary that you go and acquire a tangible asset, because then it's done. It's there with you. We are talking about, let's suppose, intangible assets which are under development. Okay. And when those are under development, they are taking more than 1 year. That will meet the criteria. Clear? Virashri, clear on this? Yeah? All right. Anyone else? Any more examples? Sorry, any more queries on this? No? Everyone clear? Sure. All right. Then I think we can look at a small example. Now, if you look at this chart, it's very much on the similar lines that we just discussed. That borrowing cost has to go to P&L always, except in case of qualifying assets. In which case, what will happen? You will capitalize that, right? Now, when it comes to the borrowing cost once again could be of various types, specific and general borrowing. And when it comes to the borrowing cost which are required to be capitalized in particular, what do you have? You may have a situation wherein those costs are required to be capitalized for a period of time. So when do you start that? When do you end that? If let's suppose there's any gap you take. Some of these examples are again important because that's how you will be deciding the capitalization. So see, in this particular topic, what is going to be the focus area? Qualifying asset. Why? Because say for a company, what is going to be the borrowing cost? So what do? You will calculate that. So interest calculation, is that going to be any complex exercise for us? Answer is no. And if you have the interest amount, what do? You will take it to P&L. So as far as accounting of borrowing cost is concerned, it's very simple. You calculate the interest, charge it to P&L. But if let's suppose you were to capitalize that, when there's a qualifying asset, that is where you need to understand. Means when do you start the capitalization? How much amount you will capitalize? Okay, when do you stop this exercise? So that's why what is going to be our focus area? Our focus area is going to be the capitalization of the borrowing cost. Clear? So I think we can look at this small example. Okay. PRM Limited obtained a loan from a bank for rupees 120 lakhs on 30th April X1. Now, in these examples, because interest is required to be calculated, so that's why some of these dates are important to be understood. So if you look at the loan, it's been specified how the loan amount was utilized. So for construction of shed, 50 lakhs was utilized. Purchase of a machinery, 40 lakhs was utilized. Working capital, 20 lakhs was utilized. Then the company has given an advance for purchase of a truck. Okay, wherein 10 lakhs has been utilized. So all in all, you are given a split of this 120 lakhs, right? Now, let's talk about all of these items one by one. When we say this shed, its construction got completed in March X2. Okay. The machinery was installed on the date of acquisition. Means you purchased and installed that. Delivery of the truck was not received. It's an advance given and so far you have not yet received the truck. And for your purposes, the good part in the question is you are not required to calculate the interest amount. Interest is also calculated for you. Okay, so this is already calculated for you. You don't need to get into the interest calculation. So now what do you have on the interest part? 18 lakhs for the year. Now you are required to comment on the accounting treatment. So before I move on to the solution, and I will request not you not to get into the solution, can you Explain what should be the accounting treatment in this case with the reasons, please. It's simple one. Just think about it. What should be the accounting treatment in the given example for this interest amount of 18 lakhs? Means how will you treat this and why? Over to you quickly.
Sir,
Yes.
Dhanlakshmi here, sir.
Yes.
Good morning, sir.
Good morning.
Construction of shed takes
Yes.
1 year, sir, means 12 months.
Right.
So we can take it for we can consider it as a qualifying asset. But here the loan is given on 1st April. That means it is before 11 months it is got completed.
Okay.
We cannot take it as a qualifying asset, and delivery of a truck is not received
Right.
within 1 or 11 months. So we may
Right.
consider it as a qualifying asset, sir.
No, my question is different. My question is, what should be the treatment of this interest? I'm not asking whether it's a qualifying asset or not a qualifying asset. That's a part of your process.
Okay.
You need to comment on the accounting treatment of interest. So there are two ways it can be treated.
Yes.
It has to go to P&L always,
Mm,
except in case of a qualifying asset. So that's how you need to think about it and answer. Yes.
okay. That means for the truck interest, for the portion of the truck interest, it should go to
Hmm.
the capitalization, and rest all
Right.
will go to the profit and loss account.
Okay. So you're saying the cost that you incur in respect of interest
Mm,
in relation to acquisition of the truck,
yes.
that you will capitalize,
Yes.
right?
Yes.
Remaining you will take it to
Profit and
P&L.
loss. Yes.
Okay, very good. Now tell me one thing, that do you have the split available for the interest portion in respect of
No.
truck? No.
No,
So how do you
it's not
compute that?
there. So we may take it under a ratio basis or maybe percentage like that.
Okay.
Ratio basis or percentage basis.
Okay, sure. All right. Then I can see this response from Sridhar. Sridhar says it should go to P&L. I'm assuming entire amount you're saying. Hemin says for shed interest, you will capitalize. Remaining amount, you will take it to P&L. So Hemin, again, my question is that how do you split this? Do you follow the same basis as Lakshmi just mentioned? And what about others? Quickly, what should be the accounting treatment? Quickly, yeah. Hemin says ratio basis. Okay. What about others? Quickly.
Sir, this is Maithili.
Yes,
Uh,
Maithili.
Sir, the interest amount is 18 lakhs, which is given by the bank for that loan amount of 1 lakh, 120 lakhs.
Right.
So, this is the only for construction of shade. The
Right.
construction of shade also was completed in March 2002. So,
Right.
the whole amount will be going for construction of a shed. So, it will be comes under P&L. So, because the construction of shed was completed within 12 months, that is a
Right.
substantial period of time. So, this is treated as a qualifying asset. Also, the interest will be going to the P&L. That's
So I'm slightly confused with your response. So what is your final answer? Means, do you say that it's going to be capitalized? So what is your answer? Are you capitalizing it, or are you taking it to P&L, or are you doing this sort of mixed thing, which I think most of you are answering?
so it is going to capitalize, sir, because it is a
Entire
qualifying
amount you will
asset.
capitalize. Entire amount will be capitalized.
Yes, sir.
18 lakhs you will capitalize, is it?
Yes, sir.
Why?
Why? Because the qualifying asset is constructed and completed within 12 months, substantial period of time. So the interest,
No, but
hold the
if
interest.
you look at the loan amount, okay, so forget about whether it's a qualifying asset or not. This
Okay,
entire loan amount is not utilized for the purposes of construction of shed. Some part is
okay,
being used for working capital. Okay, forget about
yes,
machine, forget about truck. The part which is used for working capital, do you think you have a qualifying asset in respect of this 20 lakhs which is used for working capital? Tell me.
Mm, yes, that's working capital also in the part of constructions.
What makes you say that? How do you get that? That working capital is used for construction of shed? Because
Because
the
working
question has very clearly
capital.
specified that it's not for construction of shed, it's for working capital,
Okay.
isn't it?
Yes, sir.
So how do you assume that working capital? So see, when the information is very clearly given to you in the question, if let's suppose the question was silent, there was some lack of clarity, therein you can always think about it. So these are the types of mistakes that we make in the exam also. Every time when you have a question, what do you need? You need to understand the information of the question very clearly.
Yes, sir.
Okay. Now, in the given example, if you look at the accounting treatment, so what do you have? You need to find out whether the loan amount is utilized for qualifying asset or not. Yes or no? Now, in
Yes,
the
sir.
given case, there are four usages, or you can say this entire amount of 120 lakhs has been used for four purposes. So let's evaluate this one by one. When you say working capital is not a qualifying asset. Working capital means working capital for the business. So any interest portion on 20 lakhs, will it go to P&L? Answer is yes, straightforward, because it's not a qualifying asset. So interest has to go to P&L except when it is incurred for a qualifying asset. Okay. When you talk about machinery which is purchased, so you go buy a machine and today you capitalize it. Means today you are installing that. So is it a qualifying asset? Answer is no. Why? Because machine is not taking substantial bit of time to get manufactured. You have acquired it today and you have installed it today. Yeah. So is it a qualifying asset? Again, no. Third, if let's suppose you are purchasing a truck. Now, are you constructing a truck which is taking more than 1 year? No. You have given an advance, you are purchasing a truck. So is it a qualifying asset? Once again, no. Let's talk about a shed. So that we understand is taking substantial period of time to get completed. So in the given example, out of these four usages of the loan, this 50 lakhs seems to be the one which meets the criteria of a qualifying asset. Okay. So that's why out of this 120, let me just go to that working file now, just to help you understand this a bit more. Now, out of this 120 lakhs, so we have this 120 lakhs. Okay. We can say some amount is used for construction of shed, that is 50 lakhs, and some amount is for other purposes. What is that? 70 lakhs. This 50 is meeting the criteria of a qualifying asset. Yes or no? This is not a qualifying asset. It's a qualifying asset. Right? So that means what will you do? Any interest which is, sorry, any interest cost on this 50 lakhs, what do you do with that? That's what you will capitalize. Okay, right? other part, what is the accounting treatment for the interest? It has to be P&L always. Do you need to think about it? No. See, this is the only exception that we discussed. Only in case of exception you capitalize. Otherwise, where does the interest go? It goes to P&L. Yes or no? Yeah, it has to go to P&L always. The only problem that we have in the question is that we do not have the interest amount, which is computed separately for this 50 lakhs and 70 lakhs. The question has given us a single amount of 18 lakhs on this entire loan amount. So that's why what should you do? What should you do? The best way is to allocate it on a proportionate basis. Because if there is one loan with one rate of interest, then of course, depending on the amount, you will allocate it amongst those amounts of 50 lakhs and 70 lakhs. Right? We do not have a complication wherein we have different types of loans with different interests. In such a case, this ratio allocation could have been considered to be not appropriate methodology. But in the given case, because you have only one loan amount, if you do that proportionately, there is no harm in doing that, right? So that's why what do you do? Interest portion on this 50 you capitalize, and interest portion on this 70 will go to P&L. Okay. Yeah. So now if you go to the solution, I think we can just look at the solution also. So qualifying asset as per AS 16, what is that? 50 lakhs, which is for construction of a shed. So that's why what do you do? Out of 18 lakhs means the total interest, the proportionate amount for shed you will capitalize. Okay. So every time in the question, what is going to be your methodology? Compute the total amount of interest. Out of the total interest, compute the amount to be capitalized. The balance amount, you need to take it to the P&L. Okay. Let me just write this formula for you, because this is going to be your methodology always. And this is going to be a very simple exercise, right? So what do you do? Just give me a minute. Just give me a minute. I'll open another file. So every time you have a question, what should you do? First of all, step one, compute total interest. Step two, compute amount of interest to be capitalized, the way you have done in this question. Okay. Now, step three is going to be very simple. Why? Because from the total interest, you need to reduce the amount to be capitalized. amount to be capitalized. Okay. Now, whatever amount you get in step 3, this will go to P&L. So this you'll take to P&L. In fact, if you look at this entire exercise, the only part I think wherein some sort of, you can say, effort will be required will be this step number 2. Step number 1 is very simple. Total interest. Do you think it's complex to be calculated? No. Step number 3 is what? Total interest less amount as per step 2. So if you are able to compute the amount to be capitalized, step 1 and 3 are going to be sort of very simple. Okay. So any questions if you have? Okay, so then I can see this query from Kambira Kajanara. So he's asking, we can take the interest of qualifying asset, and deduct from total interest. Yes. So exactly this is what we have done. Okay. Then Loit is asking, but the shed is also not taking more than 1 year to be completed. See, the nature of this asset is such, and you don't know where did it start. Anil is asking, sir, what all matters we need to consider while deciding whether it's a qualify. So that's what we discussed. Substantial bit of time to get completed. That's what you'll have to look into. Okay. Yeah. Everyone clear? Any questions so far? Yes. Over to you. Any questions if you have? Loit is clear. Okay. Virashri has a query. Virashri, can you? Yes, Virashri, can you please go ahead explain your query, because I think this sort of repetition, so it's better to understand it. Virashri, please pick up. Please unmute. Please pick up.
Yes, sir.
Yes.
Uh,
Yes, please explain your query.
Sir, from the date of construction, from
Let
the
me
date of
just go back to that document. Okay.
mm,
Okay. Yes. Please go ahead.
from the date we've taken the loan to the completion of shed construction, it takes only 11 months. So
Right.
for qualifying asset, the criteria should be 12 months. So how are we taking it as a qualifying?
Okay. So now, if you go back to the question, and if you go back to the definition. Now, what is the definition of a qualifying asset? So let's read this. A qualifying asset is an asset that takes substantial period of time to get completed. Okay. Now, the wording is substantial period of time to get completed. Now the question arises, what is this substantial period of time? Okay. Now, as per the guidances, what do you consider? You consider a period of 12 months or more for this substantial period, right? Now, can we say that 12 months is the only criteria? Answer is no. There are situations wherein even a lesser period can be considered to be a substantial period. But again, that's quite judgmental. Okay. And somewhere we need to draw a line, somewhere we need to consider. Otherwise, we will get stuck. Otherwise, how do we decide whether a period of 1 month or maybe a period of more than say 12 months, because that will sort of create a confusion. Okay, so that's why what do you do? That's why you consider a period of 12 months. Okay, as per the practices also. Now, in the given situation, if you talk about construction of a shed, now there are two parts to it. See, it's not necessary that the interest cost has to be incurred for a period of 1 year or more. What is the important part? Important part is to find out whether the asset is a qualifying asset or not. Now, in the given question, I can understand your confusion. You are saying that the loan was taken, and from the date the loan was taken, the construction period that you consider, it comes out to be a period of less than 12 months. But you don't know when does this construction start. Do you know that? Answer is no. Answer is no. So that's why please understand that when you have this nature of the asset, which you understand is a shed, which will generally be taking such a substantial bit of time. So you go by that nature also. Understood? Right? So that's why you are considering that to be a qualifying asset. Clear?
Yes, sir. Okay.
Okay. Yeah. Anyone else? Any more questions if you have? Yes. Anyone else? Any more questions? You can just raise hand and ask a question, or you can also write down your query as quickly. Any questions that you may have? Any doubts? No? Yeah, all clear? Okay, then Lakshmi says clear. Okay, very good. So let's move on to the next part. Okay, so now what we will discuss is that if let's suppose we were to capitalize in case of a qualifying asset. So when do you start the capitalization? And when do you stop that? Means when would this come to an end? And if let's suppose there is any stoppage in between, do we also need to suspend that? Okay, so there are three situations we are going to discuss, right? So let's look at this. Commencement of capitalization means when do you start capitalizing the interest? So the standard says you will start the capitalization when all of the following conditions are satisfied. First, expenditure for construction is being incurred. Second, borrowing cost is being incurred. Third, activities that are necessary to prepare the asset are in progress. Okay, so that's one. And you will suspend it during the abnormal period. Okay, now what is going to be that abnormal period and any sort of suspension in the active development work? What is going to be the nature of that? Because during that period, you will not be able to capitalize. And of course, when do you bring this to an end? Means when do you cease this capitalization? Now, for this, we will take an example. Okay, so let's take an example to discuss this. Say there's a project. Okay, now in the given example, please don't think about it whether it's a qualifying asset or not. So it's a qualifying asset. Okay. Now, what has happened? Say 13th March 2025. Okay. This is the date when the company has taken a loan. Loan was taken by the company on this date, right? And then you have this, let's suppose, say 31st March 2025, when the construction started on the building. Construction of building started. Okay, and let's suppose during this period for 2 months, say in July and August 2025, there was some labor unrest. There was strike and all, because of which the construction was held. Now let's suppose this construction got completed, say on 31st December 2026. Construction completed. Okay, now in this case, let's try to understand. Okay, when is the construction starting? 31st March. Yes or no? Right? In this case, what is our objective? Our objective is to compute the amount of interest to be capitalized. Right? That's the objective we are looking at. When is the loan taken? 13th March. So the moment you take the loan, what will happen? Interest will start. So tell me one thing, when do you start capitalizing the interest? Just think about it logically. When should you start capitalizing the interest? Then Lakshmi says date of construction. So tell me the dates, and dates are there in front of you. Aditi says 31st of March. Lohit says 13th of March.
13th of March.
Okay, 13th of March. Neha says 31st of March. What about this? Sridhar says 31st of March. Methili says 13th of March. Pooja has the same thought process. Veerashri has the same thought process. Okay. Now tell me one thing. If let's suppose loan is taken on 13th of March. Okay. And let's suppose I change this date from 31st of March. Let's suppose the construction of the building got started from 31st of March 2026. Okay, let me just change this. Construction started from 31st March 2026. What is going to be your answer now? When do you start the capitalization? Mathili, Vijayshri, Neha is saying I'll choose 13th of March. Aditi has changed the answer now. 13th of March. Prachi has answered this now. Prachi says it should be 13th of March. What about others? Quickly. Hemin says it doesn't matter when the construction start, it matters from the date you have taken the loan. Okay, very good. Just says charges will be applicable. Oh, sorry, I am missing out on your responses. So just says charges will be applicable from the loan taken date. Okay, means 13th of March, is it? Ishan says 31st March 26. Okay, no worries. So let's try to understand this. Let me just go back to the original dates. See, in this case, if you start capitalization, now please understand it's very, very important. If you start the capitalization of interest, what will happen? What will happen? It will be added to the cost of that particular asset. Yes or no? What is the meaning of capitalization? You are adding it to the cost of the asset, correct? Now, tell me one thing. On 31st of March, do you have any building which is under construction? On 13th of March, do you have any building which is under construction, or on which some construction activity or some active development has taken place? Then how can you bring that building in existence in your books of accounts? By capitalizing the interest. Because the moment you capitalize interest, what will happen? You will have to show a building in your books with the amount of the interest. Yes or no? That's what you'll have to do. Because the moment you capitalize it, what will happen? You will be showing a building in your books with the amount of interest. But will that be appropriate? Will that be appropriate? Let's suppose for the next 1 year. Let's suppose up to 31st March, as we discussed, there's no building. For the next 1 year, will you keep adding the interest to the building which is not in existence, for which no construction is going on, for which no active development work has started? Let's suppose for the next 2 years, no construction is going on. So will it be appropriate? Will it be appropriate? The answer is no. The answer is no. So that's why, what should you do? That's why you should always consider the date which is later of these two dates. Later of means, so when do you start the capitalization? Later of these dates. 13th March, 31st March. Understood? Understood. So when do you start? You start on 31st of March. You start from 31st of March. Right? Neha says interest will be charged from 13th March and will be shown in P&L, and its capitalization will start from 31st March. Yes, that's correct. Methli says, but the interest amount will be accrued. Yes, that's correct. See, if you have taken the loan, so interest you'll have to accrue. There is no doubt about it. The point is, can you capitalize it? Answer is no. Okay. Now, if let's suppose the construction got completed on 31st of December, 31st of December, the construction got completed, but the loan is unpaid. Okay, the loan is not yet paid. So till what time you will capitalize? Tell me. See, there are two options. Either you stop capitalization on 31st of December or you continue to capitalize, because you'll say the loan is going on, the interest is going on, so that's why I'll keep capitalizing. So what do you think? Up to what date you will capitalize? Lloyd says end of construction. Judge says till the date of last EMI. Very good. Sridhar says 31st December 26. Neha is saying the same thing. Ishan says 31st December 26. Then Lakshmi says 31st December 26. I think everybody has the same answer except for a couple of responses. Now in this case, once again, please remember, when do you stop the capitalization? Means when do you cease that? When does it come to an end? The moment your asset is ready for use. If you go back to PPE, can you add any cost to the PPE once that is ready for use? Tell me. Tell me. Can you add any cost to the PPE once that is ready for use? So that's why in this example, you may apply the same thought process. Forget about the standard. Even if you apply the other standard, you will get the logical answer. Yes or no? So that's why, when do you stop the capitalization? 31st of December. Okay. 31st of December. So that's when you stop the capitalization. Right. But if let's suppose the loan was paid prior to 31st of December, then of course you will be able to capitalize it only up to the date the loan is going on. But if let's suppose the loan is continuing, so will you keep adding it? Answer is no. That will be inappropriate. Let's suppose the loan is going on for next 15 years, next 10 years. So will you keep adding that to the cost of the building? No, that's wrong. That's wrong. Right? Yeah. So we have discussed unless saying till the date asset is put to use. No, that is incorrect. I've used the wording asset is ready for use. Okay. Put to use and ready for use are two different concepts. Once again, I would request you to please go back to AS10, which you have already covered. Apply the principle of AS10. You will get the answer. Okay. It's one of the cost in a way for that AS10 purposes. Clear? Clear on this? Now, we have discussed when to start, when to end. But there is one more small point which is important. See, if you look at this 2 months period, okay, the construction work was suspended. Why? Because there was a strike of labor. Now, can we say that this suspension has taken place due to something which is abnormal? Or do we say it's in the normal course of business for such type of activity to take place? So the standard says that if there is any stoppage, any suspension, which is abnormal, then for such period, you will not be able to capitalize the interest. Okay. Now, in the given case, when do you start? You start from this date. When do you end? This date. But during this period of 2 months, you should not be capitalizing. Okay. But if let's suppose there is any stoppage, there is any suspension which is in the normal course, will you be able to exclude that period? No. Only the abnormal stoppages, abnormal suspensions, you will have to consider. Consider means that is going to be the period during which you will not be able to capitalize. Otherwise, you will be able to capitalize. Everyone clear on this? Yeah, everyone clear on this? Any questions? See, this is again an important part of the standard because this largely talks about these aspects of capitalization because the dominant part of this accounting standard is capitalization only. So any questions, any doubts that you may have, let's discuss that. Yes, Loit has a query. Yes, Loit, please go ahead.
Sir, I understood the whole topic. I just wanted to understand if a loan was taken for a particular purpose of construction,
Yes.
and so the loan is taken for that sole purpose, and the expenses that are incurred before construction is also for that purpose. Why shouldn't it be capitalized?
No, so what is going to be the nature of those expenses? Tell me.
Like even before we can start construction, like for example, for
No, so I think there's a confusion. Huh? By construction, don't get confused the physical construction. Construction, for our purposes, which I also mentioned, happens to be the active development work. If let's suppose active development work has started, physical construction has not started, you will be able to capitalize. In the given example, I clarified that the development work has not yet started. Loan
under,
is taken, but as far as the building is concerned, nothing is happening. Okay, clear? Nothing
yes,
is
yes,
happening. So that's
understood.
why you will not be able to capitalize. Now, practically, even if it's a specific purpose loan, I can understand your thought process. Where are you coming from? Generally, the company will not be drawing the amount. Okay, that's how the loan works. It will not happen that you get a loan, so you are immediately drawing the entire amount of money. So, how do the companies do? Say they draw the money as and when it is required. Otherwise, unnecessary, because even if you let's suppose a building is going to take 50 crore, on day one, you will not be spending 50 crore. You will be spending 50 crore, let's suppose, over a period of 3 years. So every time the company needs money, they draw the amount. And that's how the interest is incurred. Okay. So on day one, you don't draw the entire amount. Right. So practically what will happen? As and when they spend something, they will draw the amount and therefore the interest will come. Otherwise, the interest will not come. Clear on this?
Yes, yes, understood. So thank you.
Sure. Okay, then I can see this query from Ishan. He's saying, sir, what if the contractor went on holiday during construction? Now, there again, you need to decide depending on your arrangement. So, what is going to be the holiday period? Sridhar is asking, but sir, at the time of construction of the building, जब building को strong होने के लिए water दिया जाता है, so you tell me whether that's in the normal course or not. So that's a part of construction only. So we are not going to discuss the steps. Okay. Let's suppose you are saying that cement is done, linter is done. Okay. Let's suppose whitewash is going on. So we are not talking about it, isn't it? Yes. Anyone else? Any more questions if you have? No? Everyone clear? Any questions? Then Lakshmi is asking, only abnormal stoppage of work is not capitalized? Yes. Yes, of course. Something which is in the normal course, that, see, something which is in the normal course is a part of the process itself. Abnormal is not something which is a part of process, so that's why you will exclude that. Okay. All right. Okay, so then I think we can take a break now, and let's continue after the break. Yeah. So IT, I think we can take a break now. IT. We can take a break now. IT, can we continue? IT, can we yeah, we can continue. All right, so let's move further. Okay, so now moving further, we'll talk about types of borrowings. Now again, a very important part of this standard. Now, what do you mean by types of borrowings? See, the borrowings could be of two types. One you can say is the specific one, and the other one is general. Now, depending on the type of borrowing, what will happen? You can say the capitalization may be impacted. Okay. So that's why it's important to understand the types of borrowings which are there. Now, how is that relevant? So let's understand the meaning of specific borrowings in general. See, specific borrowing means when a loan is taken specifically for a purpose. For example, a company has taken a loan for construction of the building. Now, because it's a specific borrowing, means it's specifically taken for the construction of the building. So that's why company will be utilizing this amount only for construction of building. They can't utilize it for any other purpose. Yes or no? So that's why in this case, the interest amount that we have is only in respect of building, which is a qualifying asset. And that's why what will happen? This amount will be capitalized. Entire amount will be capitalized. So when it comes to a specific borrowing, the capitalization becomes very easy. Why? Because entire amount you will compute and you will capitalize. But when it comes to a general purpose borrowing, means wherein the purpose is not specified, or you can say the purpose is not specifically for the qualifying asset. For example, say a working capital loan. Similarly, cash credit, overdraft. All of these are examples of what? General purpose borrowing, wherein the loan is taken by the company, but it's not specified that it is only for a qualifying asset. Okay, now think about a situation. Let's suppose a building is required to be constructed. Okay, and the company will need 50 crore for the construction, right? Now, if let's suppose company has a working capital loan, say the company has a working capital loan of 20 crore. Say there is an Audi overdraft of say 50 crore. And let's suppose company is already operational, so they are setting up another plant. So one of the plants is already operational. So the company is also generating some funds because the business is going on. So the company is also churning funds. So you can say there are internally generated funds as well. Now we don't know the amount. Now the question arises that if let's suppose the building will be constructed, now where does this money come from? This 50 crore that you need, Does it come from working capital loan, overdraft, or internally generated funds? Do we know that? Answer is no. Can you identify that? No, practically it's very difficult. Now this working capital loan may carry interest, let's suppose at the rate 9%. Let's suppose overdraft carries interest at the rate 10%. Now this is interest free because this is internal fund. Now in this case, what do you do? The requirement of the standard is very simple. It says any amount that you use for qualifying asset, interest on that needs to be capitalized. But how do you compute that interest? You don't know whether it is coming from working capital loan, overdraft, or internally generated funds to begin with. And the rate of interest in all of these loans is different. Yes or no? Yeah. So that's why now we have a complication. We don't know how to compute the interest to be capitalized. So that's why whenever you have these general purpose borrowings, that's where the calculation of interest to be capitalized requires some sort of methodology, which is called as computation of capitalization rate. See, in this case, the company will have to work out a rate. There's no doubt that the money to be utilized will be what? The amount that will be spent on the project is going to be 50 crore. Yeah, so this part is clear. But on this 50 crore, if let's suppose this money has been utilized, the question arises what rate you apply. 9%, 10%, 0%. How do you know? You don't know. So for working out that interest, what do you need? You need a capitalization rate. You can say some sort of averaging you'll do. Okay, so what do you call this methodology as? It's a kind of averaging. Okay, basis which you will calculate the interest rate and which will then be used for calculation of interest to be capitalized. Yeah, so this is the principle. You can say this is the concept. Now what we will try to do is we will try to pick up an example with the help of which we will try to understand this concept in greater detail. So let me just take you to the example now. Okay, so let's look at one example. Okay, so let's look at this example now, right? X Limited began construction of a new building on 1st January 2000 X1. Okay, it obtained rupees 1 lakh special loan to finance the construction of the building on 1st January X1. Now the good part is the construction of the building got started on 1st January X1 and the loan is also taken on 1st January X1 at the rate 10%. Now, can you tell me what is the nature of this loan? Over to you. What is the nature of this loan? This 1 lakh loan which the company has taken, what is the nature? Great. Low says specific purpose. So it's a specific borrowing. Yes or no? It's a specific borrowing, right? Okay. Now, very good. Dhanlakshmi, Virashri, they are saying it's a specific borrowing. Good. Now, moving further. See, if this was a specific borrowing, then it's very good because this makes our life simpler. But we have a problem. What is the problem? The company's other outstanding two non-specific loans were one amounting to 5 lakh, wherein the rate of interest is 11%. Other one is amounting to 9 lakhs, wherein the rate of interest is 13%. So we have got three loans. Specific loan at the rate 10%. And can you tell me the nature of these two non-specific loans? What do you call them as? General purpose borrowing. Correct? These are the general borrowings. The moment you have a general purpose borrowing, that's where the difficulty arises. Yes or no? Because now we don't know that the construction of the building which will happen, where does this money grow from? Of course, it will go from the specific borrowing to begin with, but will that loan be sufficient enough? The answer is no. The expenditures that were made on the building were as follows: 2 lakh in January, 2 lakh 50,000 in April, 4 lakh 50,000 in July, 1 lakh 20,000 in December. So now in this case, what is the amount of specific purpose loan? 1 lakh only. On this building, the total amount that is spent, can we say that the specific borrowing is enough to meet this expenditure? Answer is no. Answer is no. So therefore, where does this money come from for the construction of the building? General borrowings. See, if the specific borrowing was enough, then our calculation of interest to be capitalized on this building would have been very simple. Right? But now we have a problem. Why? Because if, let's suppose, the money on the building is being used from the general purpose borrowings, we don't know whether it is moving from this 5 lakh or 9 lakh, because both of them carry different rate of interest. Okay, so let's move further. It says building was completed by 31st of December X1. Following the principles prescribed in AS 16, calculate the amount of interest to be capitalized. Number one, pass one journal entry for capitalizing the cost and borrowing cost in respect of the building. So this journal entry is very simple. For capitalization, we can pass. I think first of all, we will have to work out the amount of interest to be capitalized. Correct? Yeah. So in this case, let's proceed. Why? Because now we need to work out that mechanism. So whenever there is a general purpose borrowing, we'll have to work out a mechanism for calculation of interest to be capitalized. Okay, so let's look at this. First of all, what do? See the amount which is spent on the project. Do we have that? Yes. 2 lakh in January, 2 lakh 50,000 in April, 4 lakh 50,000 in July, 1 lakh 20,000 in December. So as a first step, what do? We will calculate the weighted average of amount spent on the construction of building. Okay. So what do you mean by weighted average? We will have to give the weight of time. We will have to give the weight of time. Right? So this 2 lakh, what is the time period you will consider? 12 months. This 2 lakh 50,000, what is the time period you will consider? 9 months. 4 lakh 50,000, 6 months. 1 lakh 20,000, 1 month. Correct? Yeah. So if you do that, you get 6,22,500. Now, what is this amount? This is the weighted average of amount spent on construction of the building. Yeah, clear? This 6,22,500, everyone clear? right? Okay, now next. As a next step, what do we do? The general purpose borrowings that we have. First of all, we will calculate the interest of that. So there are two loans that we had, 5 lakh 11%, 9 lakh 13%. So if you compute interest on that, it comes out to 1 lakh 72,000. So in this case, what do? We will calculate the weighted average of this interest. So the total interest amount is 1 lakh 72,000. Total loan amount is 14 lakh. So what do? You will calculate the weighted average rate of interest. In the given case, weight of time has been taken as 12 months in both the cases because both the loan amounts were there for 12 months. Yes or no? So what is the weighted average rate of interest that we get? 12.285%. That's the weighted average rate of interest. Yeah. Next. So there are two steps we have looked at. First, we calculated the weighted average of the amount spent on the project. Second, weighted average interest rate in case of general purpose borrowings. Third, now we understand weighted average of the amount spent on the project is 6,22,500. Now this is the amount on which we need to calculate the interest. Why? Because this is the amount that needs to be capitalized. Only on this amount interest will be capitalized. So now out of 6,22,500, 1 lakh will come from the specific borrowing, because that is going to be the first preference. So every time you have a specific borrowing, you will use that. On which rate of interest is given to us? 10%. So the interest amount comes out to 10,000. Now, for the balance amount, 6,22,500 minus 1 lakh. Now this is the portion which is utilized from general purpose borrowings. And for general purpose borrowings, there's a weighted average rate we have computed, 12.285%. So if you apply that, what is the amount of interest you get? 74,189. Now this is the amount of interest that needs to be capitalized. Okay, this is the amount of interest that needs to be capitalized. Right? Now, what is the total amount that has been spent on the construction of the building? 2 lakhs plus 2,50,000 plus 4,50,000 plus 1,20,000. So if you add all these, okay, so if you sum it up, what do you get? 10,20,000. So this is the amount spent on the project. I'm talking about the actual amount, absolute values, not the weighted average. To this, what do you add? Interest to be capitalized, which we have calculated in step 3, 74,189. 74,189. So what is the total amount that you get? 10,94,189. 10,94,189. So if let's suppose an accounting entry is to be passed. So what is the accounting entry you will pass? Building debit to bank. Yes or no? That's the entry you will pass for capitalization. And what is going to be the amount? 10,94,189. Yes or no? Yeah. So any questions on this? Over to you. Are you clear on this? Great. Aditi is clear. Any questions?
Sir,
Yes.
here under the interest on weighted average accumulated expenses, specific borrowing, we have taken 1 lakh into 10%, no, sir? Why have you
Yes.
taken 1 lakh, sir?
Because that's the amount of specific borrowing. So if you go back to the question, So in the question it is written, it obtained 1 lakh special loan to finance the construction of the building. So what is the amount of specific borrowing? 1 lakh. Yeah, so that's given in the question. Clear? Yeah, you're clear on this?
So sorry, sir. There was some internet issue on my side, so it got
No
stuck.
worries. So I'm saying if you go back to the question, just read the question, second sentence, go back to the question, please. Read that for me.
X Limited began construction of new building on 1st January 2001. It
Mhm.
obtained 1 lakh special loan to finance the construction of the building on
Right. What
1st.
is this 1 lakh?
Okay. It obtained 1 lakh. It
No,
got
what
1
is this
lakh.
1 lakh now? Tell me. What is this 1
This is
lakh?
the loan amount.
Which loan amount?
Special loan.
Special loan. Understood?
Yes.
So it's given in the question.
Okay. Okay.
Okay.
Sir. Okay.
Aditi is asking. Aditi, I think you have some query. So can you please explain? Please pick up. Yes, Aditi, please pick up. Please explain. Yeah.
So my query is that here, because there are months, so we are considering the weighted average method. But if in case there is no month, so we will not consider weighted average.
What do you mean by months?
These are the months which are given for the expenditures on the building project.
See, every time you will have some expenditure, there will definitely be a time period. Okay, because this entire amount you can't spend on day one and you can't spend on the last day. Understood? Yeah. So the point that you are trying to understand is that because we have months, so that's why we are considering. If the months are not there, we will not consider. That will never happen. Every time you'll have some time period. Clear on this?
Okay, sir.
All right. Anyone else?
Yes, sir. I have no
Yes.
doubt.
Yes.
In this question, they ask only calculate the amount of interest to be capitalized and the journal entry, but
Correct.
we are calculating these 5 tables. So
Right.
my doubt is. In this question, they not specifically given you can calculate the cost interest on a weighted average or calculate the interest rate for each one of. So in the exam, how will you know these steps are these steps are comes under this question as an answer? It's very strange, sir.
See, there's a purpose you are attending this session, isn't it?
Yes, sir.
So in the exam, how do you solve this? That's why you're trying to understand the concept. Why are you attending this session? So that you are able to understand the concept. So once you understand the concept, that's how you will understand how to answer the questions. Isn't it? So that's how you go about it.
Yes, sir.
So if you understand the concept, you'll know that for you to get onto this solution, these are the 5 steps you'll have to follow. So now there are two ways to look at it. Either you mug it up, okay, which is not appropriate because these are all calculations. You can't learn this. The other point is
Yes.
you understand that. Okay, so just try to get a conceptual clarity on this. So I am assuming
Yes,
you
sir.
are clear on the concept as around this particular situation, because my idea is not to discuss the example. My idea is to discuss the concept. So we are just trying to understand the concept with the help of this example. So if you believe there is
Yes, sir.
anything you have missed out on, you may let me know. Okay, because there's no formula for you to get into an exam and you can say that I'll apply this formula, I'll get the answer. No, the formula is the concept only.
Okay, sir.
Okay.
Sir.
All right. Anyone else? Any more questions on this? Anyone else? Any questions? No? Sure? Everyone clear? Okay, Anil. Yes, Anil, please go ahead. Yes, Anil, please go ahead. Please pick up.
The reason behind taking weighted average method while computing expense as well as the interest is the loan is taken on a slot, like different slots, right? Like in a different slots.
See, the loan is not taken on different slots. The loan is
Am I
utilized on
correct,
different
sir?
slots. There's a difference between
Okay,
loan
that's what,
taken
like
and loan
utilized on
utilized.
different.
And I think what Aditi just mentioned,
Okay.
it's again important for you to understand that you can't utilize loan in one go. Okay, let's think about it practically. Let's suppose you are constructing a building. Can you spend entire amount on day one?
No, sir. Like we can withdraw whenever we require funds.
So that is the point, absolutely. So
Based,
why do you withdraw at different points of time? Because you are utilizing that at different points of time. Okay, so
basing
that's
on our
the
drawing power and all. Yeah.
so it's not about based on drawing power or not. So that is not important for us. Important part is
Yeah. Here
when is
it
the
is
money getting
not the
utilized?
factor. Okay, sir. Fine.
Okay, when is the
Thank you,
money
sir.
getting utilized? Okay, all right, good. Anyone else? Everyone clear now? Yeah, everyone clear? All right, so then I think we can move further. So if you go back, right? So if you go back to the borrowing cost, so there was a concept, or you can say there was a situation that we discussed. We didn't get into the details of that exchange difference. And we discussed that in certain situations, this exchange difference can also be considered as an interest. And if that pertains to a qualifying asset, it can be capitalized. Okay, so let's try to understand what is this exchange difference. Under what situations this exchange difference can be considered as interest and therefore capitalized. Okay, now see, this is a very peculiar situation. And before we get on to the exchange difference in terms of its consideration as an interest and therefore getting capitalized, it's important for you to first of all understand the accounting treatment of exchange difference. Can somebody explain how do you record exchange differences? Any thought process, any understanding that you have on the exchange difference? What is an exchange difference? What is the accounting treatment? Quickly, have you covered that? Quickly.
Sir, will follow AS11.
Very
Am I
good.
correct, sir?
No, so it's I'm just trying to understand from you. Do you understand exchange difference and the accounting treatment of the exchange difference?
Yeah, sir.
Very good. So now,
Yeah, sir. Basing
how do
on
you
the
record
like
exchange differences?
we either transfer to P&L or else we'll capitalize. The only two options.
Okay. Anyone else? Any more thoughts on this exchange difference? Anyone else? Quickly. Great. Sridhar says foreign exchange rates. No, so foreign exchange rates, you can say, are the ones that you use for conversion purposes. Yes or no? Now, let's understand the exchange difference and its accounting treatment. Okay, in case you have a clarity, it's very good. In case you doesn't have the clarity, then we can just discuss. I will request everyone to please stay on mute. Everyone please stay on mute, right? Okay. So now, as regards the exchange differences, what do you do? Let's suppose a company has taken a loan. So the loan is taken in USD, 10,000 USD. So can you record this in the books at 10,000 USD? No. Let's suppose USD to INR conversion rate on the date the loan is taken is 92. So that's why, what will you do? How do you record it? You will convert the loan amount into INR. Yes or no? So what is the accounting entry you'll pass? Bank account debit to loan 9,20,000. That's the accounting entry you will pass. Correct? On say 13th of March. Let's suppose today the loan is taken. So this is the accounting entry you will pass. Now, at the year end means 31st March 2026. What do? If the loan is not yet paid, if the loan amount is outstanding, this amount will have to be restated. Let's suppose on 31st March, the rate of conversion has increased to 93. So what will you do? You will have to restate the loan to 93. So how do you restate? You'll have to increase the amount of loan. So we'll say to loan 93 minus 92 into 10,000. Right? So you will increase the amount of loan by 10,000. So if the liability has increased, where do you take the impact? You will call it as exchange difference loss. Where do you take this impact? This impact goes to P&L. Right? This impact goes to P&L. So that's the accounting treatment that you have for exchange differences. So this is what you call as exchange difference. So every time you have an exchange difference, where will the impact go? It will go to P&L. So similar to interest, exchange differences, if you have, where will you take their impact? Their impact will always go to P&L. Always. Right? Now, there's one situation. Now here again, what do we have? We have one exception. See, the standard says that in one situation, this exchange difference can be considered as interest. So what do you consider that? You consider that as interest. And if let's suppose that pertains to a qualifying asset, so do you capitalize interest? Answer is yes. So therefore, if you are considering exchange difference as interest, what do? You will end up capitalizing that instead of taking it to P&L. See, exchange difference similar to interest has to go to P&L always. But there's one exception. So now what we will try to do is, we will try to understand that exception. And the best way to understand that exception or that situation is through an example. Otherwise, you will not get the clarity. And through the example only, you will get the clarity. Okay? And I'll need your attention because this can be slightly tricky. But if you pay attention, it's going to be very simple. So now, XYZ has taken a loan of 10,000 USD on 1st April X1 for a specific project at interest rate of 5% per annum payable annually. Okay, so it's a specific purpose loan, correct? The loan is taken in USD. So it's a foreign currency loan. So how do you record it? You'll have to record it in INR. On 1st April X1, exchange rate was 45. Exchange rate as at the year end means 31st March X2 is 48. The corresponding amount, so the loan is not yet paid. So at the year end, what do? You will have to restate the loan. Remember? Now, there is one more information available in the question. This is interesting. Huh? It says the corresponding amount could have been borrowed by the company in local currency at interest rate of 11% per annum on 1st April X1. Now, what does it mean? It says that if the company would have taken this loan in INR, currently the loan is taken in USD. If the loan would have been taken by the company in INR, then instead of paying 5% per annum, company would have been paying 11% per annum. Okay, so the foreign currency loan is cheaper. Indian currency loan is a bit more expensive as far as interest is concerned. Okay, but that's a thought. What is the actual transaction? Actually, it's taken in USD. So the company is saying that this could have been borrowed, but INR loan is not there. Loan is in USD only. Now, in this case, what do? We will calculate the amount of interest on the loan. So how do you compute that? USD 10,000 into 5% multiply with conversion rate. So that's how you will compute the interest for the year. So the interest for the year comes out to 24,000. This is the actual interest. Please understand, this is the actual interest. Okay. Increase in the liability towards the principal amount. Now, if you restate the loan, remember we discussed that the loan will have to be restated. So initially when it was taken, the rate of conversion was 45. At the year end, it has increased to 48. So there will be an exchange difference, and that will be an exchange difference loss. Yes or no? So what is the amount of exchange difference loss? 10,000 into 3, 30,000. So 30,000 is the exchange difference loss. Now, where do you take this impact of exchange difference loss? It will go to P&L. See, the interest of 24,000 you will capitalize, and exchange difference loss you will take to P&L. Okay, right? Now, next. Now, we are also trying to compute the interest, which is not actual. So we are just trying to check the amount of interest the company would have paid if the loan was taken in INR. So if the company would have taken the loan in INR, the loan amount would have been USD 10,000 into 45. Yes or no? This would have been the amount of loan on which 11% would have been paid. So that means instead of 24,000, the amount of interest would have been 49,500. But is this the actual interest? Answer is no. Now, please remember, this is not the actual interest. We are just trying to check what would have been the amount of interest if the loan was taken in INR. So therefore, what do we understand? By taking the loan in foreign currency, company has saved the interest cost. So can you tell me the amount of interest which the company has saved by taking the loan in foreign currency? Over to you. Can you tell me the amount of interest the company has been able to save by taking the loan in Foreign currency. Over to you quickly.
6%. 6%.
No, I'm not asking the percentage. I'm asking about the amount. What is the amount of interest the company has saved?
25,500.
How do you compute that?
So by deducting the interest which was paid by the USD and in Indian currency.
Okay, very good. So the amount of interest in Indian currency would have been 49,500. Yes or no? And the amount of interest which is incurred by the company actually is 24,000. So therefore, we can say 25,500 is the amount of interest which the company has saved during the year. Yes or no? But do we need to record this amount? No, because this is notional. This is not an actual transaction. But there's one analysis we need to draw. Now, this is very important. See, for saving this interest cost, company had to incur another cost. That is exchange difference loss. So company saved the interest, there is no doubt about it, but the company ended up incurring a cost which you call as exchange difference loss, because that will go to P&L. Yes or no? Yeah. So the company ended up incurring a cost of 30,000. Why? Because the loan was taken in foreign currency. If the loan was taken in INR, would the company had incurred this cost? No. So company definitely saved the interest, but ended up incurring the foreign exchange loss. Foreign exchange loss. Therefore, standard says that out of this 30,000 which the company has incurred for taking the loan in foreign currency, what can you do? Out of this 30,000, the portion which has been saved as interest means 25,500 can be treated as interest and therefore can be capitalized. And therefore can be capitalized. And the remaining amount has to go to P&L. So let me just show this on a working file to you. So we have this 49,500. Or let me just pick up this 30,000 first of all. So this 30,000 is the exchange difference. Correct? Now out of this exchange difference, what do you say? 25,500. This is the exchange difference. Huh? Change loss. 25,500 to be considered as interest. And the balance amount. Can you tell me the balance amount? Tell me quickly. Can you tell me the balance amount?
4,500.
4,500.
4,500. Very good. Now, what about the balance amount? The balance amount will remain as it is. Means this is foreign exchange loss only. So this will continue to be treated as foreign exchange loss. Now, what is going to be the implication of that? Because you are considering this as interest and because it pertains to a specific project, so that's why you will be able to capitalize this 25,500. This 4,500 has to go to P&L. Why? Because foreign exchange loss had to go to P&L only. Only because a portion of this has been considered as interest and this pertains to a qualifying asset. So that's why it's been capitalized. So therefore, what will happen as a result of this? There are two portions. Okay. There are two portions of the interest. One is interest arising out of exchange difference. Other than that, if you remember, company has incurred an actual cost of interest. Can you tell me the amount of that? What is the amount of actual interest which the company has incurred during the year? Quickly.
24,000.
24,000. Very good. Actual. So why do I call it as actual? Because that's something which pertains to the loan. Actual interest cost. Okay. Now, this actual interest cost would anyways had to be capitalized. So that's why what will happen? Now you will be capitalizing this 24,000 anyways plus this 25,500. So that's why what will happen? You will end up capitalizing 49,500. Understood? Everyone clear on this? Yeah? Any questions, any doubts that you may have? Let's discuss that. Aditi is clear. What about others? Any questions? Great. Lohit is clear. Dhanlakshmi is clear. Sridhar is also clear on this. See, some of these points are important. They are a bit tricky, but if you understand the concept, they become very simple. And I believe this concept can only be understood with the help of an example. Okay, I can see this query from Suhaira. Suhaira, can you please explain your query? Please pick up fast. Please explain what is your query. Suhaira, can you please explain your query? Mathli is clear. Suhaira, please explain your query. Please pick up. Please unmute and speak up. Quickly, please pick up. What is your query? Yes, Anil, please go ahead. In the meantime, you can ask me.
Sir, we'll simply ignore 2500 if there is no fluctuations, right? In the foreign exchange rate.
See, it's not about ignoring that. It's about if you don't have that, then it's not there. If let's suppose you believe the rate of conversion has remained same from the date you have taken the loan to the reporting date, then of course it will be zero. Okay, then
Okay.
the question of considering the
Yeah,
forex
okay,
loss
fine.
as interest will not arise automatically, because what are we trying to check? If there is any foreign exchange loss, can that be considered as interest? If let's suppose that underlying amount is nil, so do you capitalize that? No. Okay,
Yes.
clear? Anil, clear on
Okay,
this?
sir. Fine.
Sure,
Yes, sir. Yes, sir.
sure,
Clear. Thank you.
sure, great. I think Swera has a query. Swera, I'm not clear on your query. Can you please explain? Can you please explain? Okay, so Aditi wants me to scroll it down. Okay, sure. Can you please elaborate on your query quickly, Swera? If let's suppose you can't speak, it's very important to understand your query. Please elaborate. quickly, so that we can move. She's asking, just explain me the foreign. So I couldn't understand again your query. So I think maybe you're trying to understand the concept of foreign exchange laws. Is it? So the foreign exchange laws concept is very simple. Let me just take you back to the example we were discussing. Say the loan is taken by the company. Okay. Now what is the amount of loan? 10,000. The day when the loan amount was taken, it was 92. Conversion rate. So you'll record it at 92. Now at the year end, let's suppose the loan is not yet paid. It's outstanding. But the rate of conversion has moved from 92 to 93. So as per the requirements of AS 11, we are not talking about AS 16, as per AS 11, you are required to restate this from 92 to 93. So that means you will increase the amount of liability. Okay, so this liability amount increases from 93 to 92, means 10,000. So if your liability increases, what does it mean? It's an expense for the company. Now, what is the nature of that? It's a foreign exchange difference loss. Okay. Now, what is the foreign exchange difference loss? This is the amount, 10,000. That's the foreign exchange difference loss. And where do you record it? So if let's suppose you were to record it, where do you record it? So the standard says this goes to P&L. So that's the accounting treatment. But this foreign exchange loss, where does it come from? It comes from the principles of recording of any transactions in foreign currency, which is AS 11. Now, please remember the relevant standard for that is AS 11. So we are using that principle first of all. And then we are considering that if there is any portion of foreign exchange loss, can that be treated as interest? If yes, can that be capitalized? That's the point we have covered. Clear? So are you clear on this? Quickly. Okay, she's asking how do we get 30,000? So the same thing is there in case of 30,000. Okay, so now if you go back, I think you can also try to compute this. So in the given case, what is the amount of liability that we have? In the given case, the amount of liability is 10,000. Initially, the rate of conversion was what? 45 when the loan was taken. At the year end, it is 48. At the year end, what is the rate of conversion? It is 48. So that's why what do you do? Now you will restate the liability. From 45, you will move it to 48. Yeah. So what is the difference that you have? Foreign currency amount into the difference in the conversion rates that you apply. So what do you get? You get this loss of 30,000. Clear on this? So are now clear? Yeah. Okay. Sridhar is asking, sir, what if there is, see, please understand, we are talking about a situation wherein we are trying to assess whether the foreign exchange loss can be capitalized, which will arise, or this situation, this is an exception, which will arise in case of foreign exchange loss only. So if you have foreign exchange gain, so that doesn't apply to this. Clear on this? Yeah. Because what is our objective? See, whether you talk about foreign exchange or interest, both of them go to P&L. So when do you capitalize that? When it pertains to the qualifying asset, which will only arise in case of a expense situation, not in case of an income situation. Clear? Yeah. So I think with this we are through. So in the next session, we'll of course maybe practice a bit on this part, and we'll start with a new topic also. So it's very important that when we meet next, you go through this in terms of some of the concepts that we have to cover, sort of revision, so that will be helpful. Yeah, so with this I think we can just conclude our discussion. Any questions, any doubts that you may have?
Sir, one last query from my side. Like, what
Yes.
if a rate falls? Like, could you please explain the same scenario,
No,
like
that's what I
in the
clarified.
next
So if
class?
let's suppose there's a gain, so that's what I just clarified. So we don't look into it, because we are talking about a situation wherein we have an expense, we're trying to consider that as interest. Understood?
Okay, sir. Okay, fine. Thank you, sir.
All right.
So,
So
sir, that
thanks.
gain will have
Yes.
the same treatment. Like in case, instead of loss, we will just put gain. So it will have the same treatment now.
No, no,
If
no. So
we
that's what
put
I'm
any,
telling you. You ignore that. Okay,
so if
because
there is any
only,
foreign exchange gain, we have to ignore it.
yeah, because this is the exception which you are considering. This is the only situation you are considering. So you will not be considering that for each and every situation. What do you mean by exception? Only in this case you will do this. Otherwise, the foreign exchange treatment is very simple. Where does it go? It will go to P&L always, except for in this case, like the one that we discussed for interest. Where do you take the interest? It will always go to P&L, except when it is pertaining to qualifying asset.
Okay,
Clear?
sir. Okay.
All right, so we can just close this session. Thanks everyone for your time today and for this wonderful participation. And my request is that please revise before we meet next. Okay. All right, so we can close this now.